Evening to you, watching Claudia-Liza on Talk TV. I've just been joined by Dr. Roger Giewel. We're having a bit of a chat when he came on there, so you're catching the tail end of that chat. But yes, you're watching Claudia-Liza Vanderpoint on Talk TV this Saturday afternoon, evening. Give me a call on 0344 499 1000. You can also text TALK to 87222 or tweet me at Claudia-Liza TV or at Talk TV because I really want to get to, understand how you feel, how you're feeling about the autumn statement. Things are going to be tough. I mean, they already are tough. They're going to get tougher. If you thought you were going to get a lot of support from the government through this, think again. There's going to be some support, but not a lot. There will be a lot of support after the next general election. So the Tory government will be like, okay, well, there's some good stuff coming, but vote for us and then you'll definitely get it. Hey, how do you feel about that? In fact, how do you feel about Jeremy Hunt's statement compared to Kwasi Kwarteng's statement? That's what I want to know, because there were lots of things on offer with that statement. The markets didn't like that one bit, or the pound, etc. Pensions, mortgages, banks, nobody in the financial world liked it. But I want to know how you guys in, the real world, how you felt about this. As I say, particularly compared to what we got from Jeremy Hunt now, the new Chancellor. And it's just so different from what we saw just 8 weeks ago, right? So, how is your wallet looking 8 weeks ago compared to how it's looking now? 0344 499 1000. Tweet me at Claudia-Liza TV. You can also tweet at Talk TV and text TALK to 87222. Later this hour, we're going to be talking to Dr. Tessa Dunlop with all her news on the royal family. Also got news on socials as well in terms of what people are talking about in the world of social media. But yeah, let's dive in and take a look at exactly what this autumn statement means for everybody, how it's going to work, and, compare it. The markets liked it. Absolutely, the pound didn't crash. That's nice, isn't it? It's just so nice when the pound doesn't crash after a statement. The pound didn't crash. The markets didn't go crazy. So evidently the markets like it. But how do real people, everyday people, feel about this? Joining me now, as I mentioned earlier, Dr. Roger Giewel. He's CEO of Fair Money, personal finance and credit expert. And joining us via Zoom is Vicky Pryce, who's a chief economic advisor. Good evening to you both.
Good evening, Sheila.
Thanks so much for joining me today. And as I said earlier, I wanted to get two economists' take on this because, sometimes people go to economists, there's, it's like one blanket, you guys, all agree, and ipso facto ergo, everything is making sense because everybody is on the same page. And that, of course, isn't the case. You've got different economists, different views, different ideas, etc. So which is why I wanted to speak to two tonight. So Dr. Giewel, what was your reaction, first of all, to the autumn statement? Right move?
My reaction, it made me want to sing.
Oh.
I'm dreaming of a tight Christmas. Oh. Scrooge came early on Thursday. That was my reaction.
It was quite miserable, yeah.
Can I just say, though, that you've only got about 1.5 economists. Vicky is the super economist.
And she is.
I'm a personal finance and credit expert.
No, indeed. So, no, indeed. Well, even so, I wanted somebody who could look at, here we go, how people... So, Vicky will probably focus more on the markets, and they're singing a different tune. As you can see right now, they're loving the autumn statement. But in terms of how everyday people will respond, what they're going to get in their pockets, this is exactly why I'd wanted somebody like you.
Yeah, well, I think, as you said earlier, that what Liz and Kwasi did was very admirable, and if only, but they didn't present it right, and it wasn't just cosmetics. The backup wasn't there. So the markets, who are not very forgiving, just trashed the whole thing and dumped UK PLC, if you will, dumped our bond values and increased our borrowing costs, and really caused quite a catastrophe for a short while. I have my own theory about that.
What's your theory? Because I'm confused. Honestly, I'm confused.
Okay.
Where I'm sitting, I see it's the markets that got rid of Liz Truss and Kwasi Kwarteng, as opposed to the people.
Absolutely.
If that makes sense.
Absolutely. I think the people loved what they wanted to do, and it was very noble but very naive. I'm wearing this badge because I don't want people to think that I'm in my usual friendly, open, and open to suggestions mood. I'm really quite cynical about this autumn statement. And quite cynical about the government at the moment.
What's your theory?
But my theory about Liz Truss, I have two theories today, CL.
Go on.
One is the one I'm going to tell you in a minute that you just asked for. The other is my theory about the autumn statement and what's really behind that. Pardon me, as you know, there's always a theory behind every story. My theory of what happened with Britain falling off a cliff after the mini-budget fiscal event, you call it a fiscal event, so you're not accountable. If you say budget, people want it. It's a fiscal event. It's like going to a wedding that you call a function because you didn't like the bride
like
or something.
Like a civil ceremony, but it's a wedding. Do you know what I mean?
Yeah. So the fiscal event was a disaster. I think what happened is everything fell off a cliff, including those two unfortunate folks who weren't perhaps up to their jobs. Not because of economic factors and the markets. I think they were kind of pushed by the Bank of England and various others who didn't like it because everybody has lost sight of the fact, goes my theory, that in the months before, if you remember, Liz said she was going to get rid of the Bank of England's independence. And Andrew Bailey and his colleagues didn't like that. It's a historical fact that the Bank of England is to remain independent from the British government. So that monetary policy, why do economists, politicians always use, I'm sorry, Vicky, words that nobody understands? Monetary policy, what does it mean? It means interest rates and money supply. Okay, they were afraid that putting that in the hands of Liz and Kwasi might be dangerous, and guess what? They were right. So I just think that somebody gave somebody a little shove, and off the cliff they went.
This is really interesting, Vicky. So I've been talking so much to Dr. G. Wall, but it's just, this is the kind of thing that I've been scratching my wigs and just been like, what has been going on? How is it we lose a prime minister and we're in this economic mess? And you know, lots of people are blaming Liz Truss and Kwasi Kwarteng. I don't think it's as simple as that.
Wait till you hear today's theory. Look,
let me go to Vicky. Let me go to Vicky quickly, only because I just want to bring her in and actually get some response here to some of the things that you're claiming.
Sure.
Andrew Bailey and the Bank of England, that they effectively, in their way, pushed out Liz Truss. Vicky Pryce, what do you think?
Well, it's an interesting theory. It is absolutely true that we were hearing during the period of the election campaign between Liz Truss and Rishi Sunak, who is now our Prime Minister, that Liz really wanted to change things quite considerably and was talking not just about Bank of England. It didn't quite say she was questioning the independence, but Bank of England actions, and also Treasury orthodoxy. So the worrying thing for the markets was that the first thing that her Chancellor did, practically on day one of taking over the job, was to get rid of the chief civil servant who was running the Treasury. And that was seen by many as the beginning of the end, in a way, the beginning of the end of any sensible policy, of any cost-benefit analysis. So, in fact, I remember I wrote a little blog saying, from here on, you can see the economy shrinking rather faster than it would otherwise have done, because there is no credibility in whatever it is that they're going to be announcing. It's not necessarily that what they announced didn't make any sense, because, of course, we all want growth. And what we're being hit by now, of course, as a reaction to this, is cuts coming in public spending and increases in taxes, which we needn't have had, frankly. But their actions made it much more likely that we'd end up where we are now.
Let me just explain to you, Dr. G. Wall, in terms of some of the... Roger, thank you, sir, some of the things that Vicky Pryce was saying. So, Vicky, you're saying, directly from Kwasi Kwarteng's budget, fiscal statement, directly you saw the economy shrinking and you just felt that they had no credibility, and which is ultimately the main reason why we...
Sorry, it wasn't directly from the budget, it was from when they got rid of the head of the Treasury, which really immediately meant that they weren't going to be listening to advice any longer. And that was the concern. It wasn't necessarily the extent of the economy shrinking. It was just that the health of the economy was in danger, and we put the economy in danger as a result of the mini budget that came the day after the Bank of England itself had raised interest rates and thought actually things were looking reasonably okay. They only raised interest rates by 50 basis points, and they thought that it was all okay. And what is more, they were about to start selling themselves lots of gilts back into the market. Because if you remember, during the whole of COVID, the Bank of England had intervened very significantly by buying bonds in the secondary market, keeping yields low, making it possible for the government to do all that stimulus that they absolutely needed to do to keep the economy going. They felt quite confident just before the mini budget that actually they could stop all this and start selling those bonds because the markets would accept it, that there was some sort of plan ahead. And then out came the mini budget the following day, which sort of gave the market indigestion. They thought, my God, there's another 45 billion there, in addition to everything else we've heard about, which is unfunded and is going to add to what is expected of us, and we're not going to buy that. And that was basically what happened.
Certainly.
That's why the Bank of England intervened.
So that statement, Kwarteng's statement, gave the markets indigestion off the back of, all the money, all the borrowing that we made during COVID. However, they got indigestion, I would argue, Vicky Pryce, off the back of nothing actually happening. They were worried, they were scared. They predicted that, this was what could happen, but it didn't actually happen, if that makes sense.
Well, it's interesting you say that. They obviously knew, because everyone had heard this through the summer, that Liz Truss was going to cut taxes and get the economy moving again.
Sure. No surprises, yeah.
And also, of course, that there was going to be an electricity price freeze. She made that very, very clear the moment she was elected as leader of the Tory party and then when she took over as Prime Minister. So the markets knew that even before the mini budget, that this was going to happen and there was going to be some extra borrowing. They didn't really mind that. They thought that that was fine and perhaps it made sense to get the economy moving again. So the markets didn't react negatively at all at that point. What they reacted negatively to was having a mini budget with no analysis coming on the back of it. And the fact that the institutions that we had set up, whether those were the Bank of England or the Treasury, or whether that was the Office for Budget Responsibility, independent, providing the background, if you like, to reassure the markets that there is at least some acknowledgement that we know what we're doing and where the economy will be going and what this fiscal path might mean. So that was absent. And that was really what did it, if you like.
Okay.
It was that absence using the support, the analysis that was absolutely essential.
I have to agree with you there. Gosh, why? It hurts so much, actually. Why did they not just get this properly costed, assessed? That was the big, and it's really it's people. It's people who really suffered from that. Let's take a look at this autumn statement, though, Roger. Yeah. Is there any good news for people's wallets right now, given what we're going through with high prices, high inflation, disposable income reducing, all that jazz?
I think there is some good news. First of all, let me apologize to Vicky because I can't respond to some technical difficulty. I haven't heard a word that Vicky has said, and I know the
amazing.
I know the engineers out there are trying.
They're working on it. I mean, she talked about the meaning of life. How to raise perfect children. It was so.
I'm really sorry to miss that, but at the same time, it's a great way to have a debate when you can't hear your opponent. Yeah, there were some good things to come out of the budget. I think that the whole budget is stealth tax. What is stealth tax? That's where you don't raise the rate of tax. You move the goalposts a little bit and the lines on the field, and there is creeping extra taxation. So you keep allowances frozen so that they don't increase every year. So your tax bill goes up and up and up. All kinds of, a dozen different little techniques like that. And people go, oh, that's only $1,000 a year. That's only $2,000 of it. And then you turn around a few years later and say, oh my goodness, that's really cost me a lot of money. So on the one hand, it kind of makes people grumble. But on the other hand, it's good in that it doesn't hit you all at once. And if they really did need to raise taxes, then that was, sort of a gentle way to do it. That's one good thing. I think also the windfall tax on the energy, the oil, and even now the electricity companies is useful because they're making so much money, especially from the inflated price of electricity. I'll come back to that in a minute. That's a very important part of the second theory. And I think also the 3% extra corporation tax on banks is very important because once again, darn it, for the last how many dozens and dozens of decades. Interest rates have gone up, and they don't share it with us, do they? I've had no notice from my bank. They're paying me more on savings. Do you know there are 7 times more savers than mortgage holders? That's how big the market is. And every time there's an increase, in all the many decades I've been in this country, I have never once seen savings rates go up commensurately. So I don't like windfall taxes because I think it's unfair, uncapitalist, undemocratic to tax somebody just because they're doing well. But in this case, I'm glad they did that to the banks. Okay. Those are the good things that came out of it.
We've got about a minute left, Roger.
Okay. All right. Well, then, if that's all the time we have, yeah. I want to say that I believe that what has happened here with the autumn budget is that... Sorry?
Oh, I'm just asking if we can go over a little bit. Sorry, do again.
It is all based on the black hole.
We're extending it. Go ahead, sir.
Good. It's all based on the black hole, which is mythological. So many leading economists, so many newspapers, the Mail, the Guardian, the Telegraph, the New Statesman, have all said there is no black hole. They've just made this up. If Jeremy Hunt used the same calculations that Rishi Sunak used the whole time he was in office, we would have a 14 billion pound surplus, not a 55 million pound black hole. Okay. I believe they made it up for purposes to generate, number one, a lovely, jubbly cash pile in time for the next election, and therefore the ability to make swinging tax cuts, because they feel they've lost it so much that that's the only thing left for them to do to keep Labour, who, as someone said, could say the word marmalade in answer to every question between now and the next general election and still win. And still win. That's what I think is going on here. I think it's very unfair. I'm so livid that the Met has thrown me off public transport for frothing and ranting and disturbing other passengers. I just think it's incredible. That's a joke.
Oh, okay.
Yeah. I think it's. I'm sorry. I'm just going fast, so I didn't get the timing well on that.
Let me bring in Vicky Pryce quickly. So Vicky, clearly the markets haven't been given indigestion off the back of Jeremy Hunt's statement. What do you make of it? Do you think it was? It is too harsh, as Roger is pointing to here. You've got a lot of people who are not going to be better off the back of this.
It's absolutely true that this is going to be the case. I mean, there has been a bit of redistribution. Those at the higher end, at the top end of the pay scale, will be paying more. But there has been quite a lot of relief, I think, among those who receive benefits, because of course they've increased in line. They will be increasing in line with inflation as of next April, and also of course pensioners who are going to get that increase as well. So there was a lot of discussion about that not happening. The people who are going to be squeezed are those in the middle. There's been a lot said already and in the papers about the extra tax that will be paid because thresholds are being frozen. But of course thresholds are frozen all across. It's not just income tax, it's also the national insurance contributions, the thresholds being frozen. Those also, for interesting enough, for employers who therefore are going to have a lot more extra costs now because obviously it's going to cost more for anyone to be hired because the costs that they have to pay, the extra tax they're going to have to pay to the government increases because thresholds are frozen. So there is that too. There are some benefits for businesses in particular, business rates for small firms. There is a package there that is actually quite helpful for the next year. So that's good news. But if you look overall, going back to, if you like, what happened the previous time and where we are now, the truth is that partly because the economy is slowed down quite a lot, partly because inflation is considerably higher than perhaps it had been anticipated, and it adds to the cost of servicing the debt. What we're seeing over the next few years is not going back to where you would expect us to be if you had a proper fiscal plan. In other words, we don't eliminate the deficit over the years to come. We're still going to be borrowing extra money every year over the 5-year period that we're looking at. Yep. Even if by the end of it, we may see debt to GDP ratio start coming down. So it's not going back to old-fashioned austerity from that point of view. It's
absolutely, definitely looking like some pretty hard times ahead. Vicky Pryce, always a pleasure talking to you. Thanks so much for being with me on Talk TV, and Dr. Roger G. Such a pleasure meeting you. Really, really good talking to you. I'd love to have you on again.
Thank you.
Thank you. Well, look.